If your business has a partner, an investor, or even a spouse who is not a United States citizen, a new federal rule may have just disqualified you from the most important loan in small business. And this video shows you the 4 ownership checks that decide it. The Small Business Administration just rewrote who is allowed to get one of its loans, and almost nobody was told. It took effect quietly this year, and it can knock out a business with perfect books before a human ever reads the file. Did you know that a single part owner who is not a citizen can now sink your entire loan application? Did you know that ownership hidden inside a holding company or a family trust now counts against you too? $5 million. That is how large a loan this one program can back, and a single owner is now the difference between getting it and being locked out. The SBA stands behind billions in small business loans every year. It is the cheapest, longest money most owners will ever get. And the rule for who gets in just changed in the biggest way in years. By the end, you will know the 4 situations that now disqualify you, the one move that can save your application, and what to check first. Stay to minute 4, where the trap inside holding companies lives. So here is what actually changed. The agency rewrote its rulebook this year under a new executive order, and as of March 1st, the rules around who can own a business that gets these loans got dramatically tighter. For years, a business could qualify, even if part of it was owned by a non-citizen, including green card holders, as long as the majority was eligible. That flexibility is gone. Read this part twice. To get one of these loans now, 100% of the owners and 100% of the people who guarantee the loan must be United States citizens or United States nationals who live in the United States. Not most of them, all of them. If even one owner does not qualify, the whole business is shut out. Here are the 4 situations that now end your application. Any one of them is enough. Situation 1. You have a co-owner who is not a citizen or national. Any ownership stake at all, even a small one, by an ineligible person now disqualifies the business. No safe percentage anymore. Situation 2. You have an owner with a green card. This is the big one. Lawful permanent residents were allowed under the old rules. Under the new rule, they can no longer hold any ownership in a business applying for these loans. Situation 3. The ineligible owner is hidden inside another company. If your business is owned by a holding company, a partnership, or a trust, the agency traces the ownership all the way up. A non-citizen 3 layers up still disqualifies you. Situation 4. An owner or guarantor lives abroad, even a United States citizen whose main home is outside the country, and its territories can now make the business ineligible. Where owners live is now part of the test. One relief. The rule covers owners and guarantors, not regular employees with no ownership. And here is the part that should make you stop the video. Most owners rejected by this rule never see it coming. They are a citizen, so they assume they are fine. But this rule is not about you alone. It is about every owner and guarantor. Picture this. Your business is owned by your holding company. Your holding company has a silent investor on a green card. You could have a perfect personal profile and still be denied, because the agency follows the ownership up to that one investor. Here is the move nobody teaches. If you have an ineligible owner, you are not automatically finished. You may be able to restructure the ownership before you apply by buying out or redeeming that owner's stake so the business becomes fully eligible. And if you already had an application or a loan number in process before the rule took effect, the older rules may still apply to you. Timing matters enormously here. Quick reset for anyone just jumping in. The SBA tightened who can get its loans. All owners and guarantors must now be eligible citizens or nationals living in the United States. Green card holders are out, indirect ownership is traced, and one ineligible owner sinks the application. Now here is what to do. Before I show you the 3 moves, let me give you the one rule that decides whether you are eligible at all. Quick favor, if this is the first video that actually explained this rule in plain English, hit that like button and drop a comment below. I read every single comment and reply personally. Share this with any business owner who has a partner or an investor, and don't forget to subscribe. We put out several new videos every week. Drop a comment. Does your business have more than one owner? Yes or no? I want to see how many of you this touches. Okay, here is exactly what to do. 3 moves. Move 1. Map every owner and every guarantor on paper before you apply. List everyone with an ownership stake, direct and indirect, and everyone who would sign as a guarantor. For each one, confirm 2 things: that they are a United States citizen or national, and that their primary home is in the United States. If you cannot prove it for all of them, you are not ready to apply yet. Watch this part carefully. Guarantors count, not just owners. A lot of people map their ownership perfectly and forget that the person co-signing the loan has to clear the same bar. One ineligible guarantor can sink an application that was otherwise clean. Move 2. If you have an ineligible owner, fix the structure before you apply, not after. Talk to an SBA lender about your options. In many cases, the answer is a buyout or a redemption of the ineligible owner's stake, so the business is fully eligible the day you apply. And know this, there is a 6-month look-back, so the ineligible owner must be completely bought out before your loan number is issued, not just before you apply. Or, if your application was in motion before the rule, ask whether the older rules apply. Do not guess. Lenders are now verifying ownership far more deeply than before. Most channels miss this. It is not enough to be eligible. You have to document it. Lenders now have to trace and prove the ownership chain. So the cleaner your structure is on paper, the faster you move. Move 3. If you are fully eligible, apply now and apply clean. If everyone clears the bar, get your application in with the ownership fully documented from the start. The owners who get approved now are the ones who hand the lender a complete ownership picture instead of making them dig for it. Let me bring it all together. The SBA rewrote who can get its loans. 100% of owners and guarantors now have to be United States citizens or nationals living in the country. Green card holders are excluded. Ownership inside holding companies and trusts is traced all the way up. And a single ineligible owner shuts the whole business out. The one rule that beats all of it: confirm full eligible ownership before you apply. Never assume you are fine just because you personally qualify. Map every owner and guarantor. Trace the chain through every entity. And if someone does not clear the bar, fix the structure or check the older rule timing before you ever submit. Here's what to do this week. Write down every owner and guarantor, direct and indirect. Confirm citizenship and residency for each one. If there is a problem, call an SBA lender now while you still have time to restructure. 10 minutes this week can save you months chasing a loan you will never get. One last thing before you click off. And there is a darker side of business funding. Some merchant cash advances are now being treated as illegal loans, which changes what trapped owners can do. I break it down in the next video. If this video helped you, please give it a like and leave a comment. I read every comment and reply personally. Send this to any business owner who has partners or investors, and make sure you subscribe because we put out several new videos a week, all free. And the next video you should watch is how some merchant cash advances are being treated as illegal loans and what that means for trapped owners. Subscribe so you don't miss it. See you there.